statistics. We don't trade off news. We could care less about the news, right? It's all FUD anyway. It's always FUD, just like news in any aspect of our lives, whether it be politics, sports, any of this garbage, cryptocurrency, financial markets, right? It's all to mislead people, to get people in bad positions, get people to make, the wrong choices. We trade volatility, right? And, if the China markets and the China housing and all that just takes a big shit, good for the communists. But I do believe cryptocurrency in general will benefit from a market turn down. There's nowhere to hide. There's nowhere to run. People know where to run to, and it's crypto. So we'll see what happens, right? I mean, what are they going to do? What's everybody going to do? Pull out of these markets and go into cash? Cash is a joke. It really is. So this will get pretty interesting. Let's see what's going on here on these two projections. See this projection starting from when we went from 28K to 43. We got this 4-day pullback here, and that's where I'm starting this projection from. Yesterday we tested the mean. Right now we are testing the bottom side of the 68.3 probability level of Laplace distribution. We are hitting the second standard deviation Laplace distribution as we speak on the daily. So the yellow dot is right there. Then if you go from this projection, starting on that 10.5K drop on that daily candle, right? We are testing the 95.4% Laplace distribution range. So is what I was initially looking for by the end of this day. I mean, obviously we got about 3 hours and 54 minutes, or 2 hours, 54 minutes left. Was another 3SD standard deviation move today. There's a lot of confluence down in that area as well with a weekly level. We could get that. We definitely could get that. But if we pop over here on the VRE, you'll see this right here, this white cross line, that's a 95.4% probability level on the daily Laplace distribution. So we're making a run at it right now. Could get a nice bounce out of there, right? I mean, there's only a 4.6% chance that price action gets through this range. That's not saying it can't happen. There's still a probability it can. Down here, here's my area of interest right here. We've literally got, let's see, we've got the last level. Let me make sure. Talk. Where are you? Okay, here's the daily range. 1, 2, 3. Yeah, it's way down there at 34K. Okay. So we've got third standard deviation, normal distribution on the daily, blue cross line here. We've got the fourth standard deviation on this last 4 hour candle, normal distribution. And that's on the 4 hour time frame. All these thin lines are always 4 hour. You can see how they step line back and forth every change of a 4 hour candle. We've also got, this is a monthly level. This is the first significant monthly level, right, of the monthly range we're dealing with right now. And then we've got a significant area here, the second significant area for the daily volatility range. So we got a big pile up. We got a pile up from about, let's take some averages here. Probably like about 39.5 down to about 39.3. Let me see here. Actually, you know what? That's the second standard deviation on the daily. That's the second standard deviation on the daily. I did say that was the third. Here's the third down here. But there's a big pile up of volatility range and distribution levels right in this area. Like I just said, 39.5, 39.3. I mean, just a tight little couple $100, $200-$300 range. So to get a 3SD move right now, because it is fluid, right? These distribution levels will move with price action a little bit. It's a little bit over 38K right now. But then we've got a weekly level, which is literally the second weekly level, the second significant area for the weekly. 1, 2. Actually, it's the third. Wow, that's that's pretty powerful right there, to be honest. Okay, yeah, because the weekly's way up there. Yeah, there's the weekly. There's the first. Green dots. Green dots. We just passed the second. Here's the third. This is definitely an area of interest for me right now. If it doesn't make a full move down to this 3SD standard deviation on the daily, a little over 38. Very interesting. But yeah, now I've been talking about this for a couple of weeks, that there's going to be a shakeout, right? Like I said, I don't give a shit about the news, right? This is a random market. Bitcoin loves to shake people out of positions. And that's exactly what's going on right now. And it always amazes me that after we get a down move, that's when shorts start piling up. It's like, oh boy. We did have, over the last few days though, there's been a lot of longs piling up too. And I'm just going on just one exchange, right, where you can actually get some information off of on Bitfinex. Just taking a peek there. So let's go over to chart. Get this on index. Going to give us some higher time frames. So it's coming down. Let's take a peek right now at the 4-hour volatility. Yeah, we're breaking correlation. Low length AVR contracting positively correlated on the mid length, and the high length still it's expanding positively correlated, but you can see the entropy indicator, right? Log returns are above the mean and they are rising. Entropy is definitely out of randomness. It has been since the beginning of this move on the 4-hour. Definitely trending. That's what I love about you can make the candles show the color of the entropy. So you really, the only reason you're looking down here, you want to see the EPP, right? The entropy price percentile, to see what the correlation between the entropy and price action is. That's what the top part of this indicator is doing. It's letting you know, is correlation increasing or decreasing? Right now you can see it's increasing. It's increasing for sure. It's up here right with the standard error bands too, the EPP and the absolute mean entropy. They're both hitting these standard error bands. And we've got some nice little upgrades going to be popping into Wolfsbane. Probably, we'll see, maybe later today. One of our coders is working on it, doing some good work. It looked really fancy. I like it a lot. We're just pretty sure just working on the Z-score. We're going to be able to turn it on log returns. So that's pretty important. Sometimes you want it on price, sometimes you want it on log returns. Depends on what you're looking at. If you're looking for divergence, you definitely want to have the Z-score on log returns. No doubt about it. Okay, so let's check it out. Look right where this correlation breaks on this 4-hour. The blue line is variance. Correlation breaks negative, right? It's heading down. So you're going to get a walk up in price action. Look at this big bullwick on the bottom of this candle right here on this 4-hour candle. Then the next 4-hour candle went up. And it tried to get up above this Gaussian mean on the deviation bands. You can see the next two candles were both dojis. Indecision. What are we going to do? Well, we're underneath this heavy ass Gaussian mean here. Apparently, it was a move to the downside. And you can see that right here, right after the two indecision candles, the variance takes off to the upside again, and it's negatively correlated. Returns oscillator heading down, right? Heading down. And right here, the R squared, right? This is the alpha squared for the correlation between the returns and price action, right? These histograms, just like over here on the EPP, this is telling you the same thing. Whether or not you have a whether or not the correlation is increasing or decreasing between the returns and price action. You can see as soon as you get these two blue histograms out, it's when we're getting these 4-hour candles to the downside. DLP's picking up too. It's actually crossing the standard error bands. But at the same time, DLP has been building some bull div. We'll see. We get a big move right here, and this 4-hour candle closes down here, right about in the same area as these big three. That's going to negate any bull div that was happening on the DLP. So let's check this out. And we did have some hidden bear too, right? We did have some hidden bear, and that is right. Bam. Let's pull that down a little bit. All right, so there's a higher high on the oscillator. And what is a hidden divergence? Hidden divergence is telling you, right here, there's that blue candle. Well, oop. Get up here, booger. There we go. Lower high on price action. These two bullish candles. That doji right there. And this one right here, after you saw the variance going down, negatively correlated. This is how all this works together. It's going to take people some time, but if you study this, you're going to figure it out, right? Everybody in here is smart, right? There's nobody out there that doesn't have a high level of intelligence that's even attempting to trade any market, right? Unless you're just looking to be living in a van down by the river. I don't know what your what your goals are of trading, but that's not my goal. Let's see here. Let's get rid of that. So yeah. So also there was hidden bear. Which hidden bear? You see this down move on the 4-hour? Then you get some hidden bear here. That's a continuation divergence. It's telling you, hey, all right, hidden bear, boom, we're going to continue this down move. What is this first deviation band at? 38.3. Wow. You guys would laugh right now. That wasn't there the other day. But if you knew where I had some orders at, you'd laugh. You'd be like, oh, you know what you're doing. Yeah, sometimes you're just lucky. No, see, there's that 3SD move that I was talking about was at about 38.2. About 38.2. So whenever there's volatility like this, especially on a daily candle, I'm not afraid to go down to a 3SD level, normal distribution, and throw an order in. I'm not saying a big order. I would never do that, right? But one Bitcoin, right? So I'll usually throw like one Bitcoin order down there on the 3SD level because you never know. Because you're going to get a bounce from there. As soon as I woke up and I saw what price was doing, I was like, I'm going to throw an order down there. Just in case we get a nice wick. Because you hit that 3SD level. I'm not saying it can't go past that. But you're going to bounce from there. You're going to get daily. Say around. You're going to get that. And here's another reason. Let me show you real quick. Let's get rid of these PBs so we can see these current candle distribution levels really well. Let me get on the index. Bitcoin index. Show your color, son. There we go. Beautiful. So right now, 3SD right here. It's a little bit over 38K. Before this daily candle really started cooking, it was up at about 38.2. And you can see that. You get a big volatile daily candle, you're going to see $200-$300 movement of those volatility ranges. For sure. It's not repainting. It's just fluid. That's how distribution levels are. They're not going to stay. Once it starts to get closer, they do. They'll lock in and they will stay there. But if you jump up to, was it weekly? Let's see. 39. So actually on a weekly, the 95.4% Laplace distribution level is getting ready to get hit. 39.464. Right? You could see, I mean, we're talking a weekly. That's one hell of a weekly candle. We could get a big bounce from that area. We really could. What did we just go down to? I mean, we pretty much almost just hit it. Within, what's that say? Boy, my vision. 39.487. Right? Look. 487, 472. mean, we got within $15 of it already. Got within 15 bucks. We jump up here on the monthly. Let me see something. Was it the monthly? No. Was it the 3-day? I see that at. Dun, 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 dun. 3-day again. Oh, I don't know where I saw that. Is it the 7-day? Yeah. Second standard deviation on the 7-day is at 38,895. Could have swore there was another high time frame deviation level right around 38.3. Really did. You know what it was? That's why. That's why I'm not seeing it. Just like on the daily, right, where these distribution levels move, it's going to move even farther on a weekly. It was a second standard deviation on the weekly candle. Right now, that's a little under 38K. It was at 38.3. It was at 38.3 at the beginning of yesterday, or right around the 38.220, if I remember correctly, something like that. So when I saw that matching up with like the daily 3SD standard deviation, then I saw there's a significant weekly level down there. This baby's wanting to move down there too. I wouldn't be a bit surprised if we get a little ching ching ching. I mean, it got within $1,000 of that area. Like I said, where are we bound? I mean, what did we just bounce off of? We're bouncing right off that Laplace distribution on the weekly. So I mean, to the dollar almost. See, look now that the price action pulled back, the 95.4%, it's fluid, right? It moved right back up. Now the wick's touching it to that dollar. That interesting. Yeah, it was just at 39,544. Yeah, that thing bounced up a lot. Yeah, it was within about 40, 50 bucks. Once that sets in place at the end of the week, we'll really get an idea exactly where it was. But that's where we just pulled back up from right there. Hell of a bounce too, right? Kidding me right now? $1,100 in like literally 2 minutes. This is why these levels are important, but don't trade them blindly. Don't trade them blindly. That's a good way to get wrecked. You have to find, if there's enough confluence in an area, and we're talking about, you know, third standard deviation, normal distribution, 95.4% Laplace distribution on even a higher time frame. Yeah, you can make some good trades from there. I don't think it's not going to go lower, right? Those are just good bounce spots. And where did it bounce to? So it literally hit the daily second standard deviation, the weekly 95.4% Laplace distribution range, and it bounced from there all the way back up to the bottom side of the daily first standard deviation, right? And this is high frequency trading firms. This is what they're programming their algorithms for. Do you think there's a bunch of retail traders that don't even know what a damn standard deviation is? Do you think they're the ones putting in buy and sell orders in these places? No, not at all. This is why we trade using volatility, probability, and statistics, right? We as a human, as an individual, I can never aspire to be able to trade as fast as these algorithms. I'll never be able to do it. But what I can do is I recognize these areas, and I am able, through seeing different confluences, to jump on those algo coattails and make some profit, man. Why everybody else is like, oh, stay out of the chop, stay out of the chop. But that's another thing I was going to tell people. If you don't know what you're doing, just sit and spot, behave yourself. Try not to lose your account because this shit is crazy right now, right? There's a lot of volatility in the market. And you think this is a lot of volatility. Wait if the traditional markets really start dumping out and stuff. I mean, and people start getting out of the traditional markets. Most people are investors because they don't want to sit in cash. They're going to want to get into something. And the smart investors are realizing cryptocurrency is for real. It is the future. They've been lied to about it for years by their so-called financial advisors, by their banking systems. It's just so stupid. It really is. So what's this weekly? What's this look like on a daily for div with the turns? I mean, we are creating a little bit, right? We are creating some div here. And it's still building from the big 10.5K dump candle, right? These are all higher lows. Every one of these bearish candles. Yesterday got a little closer, but it still did not like negate that divergence. It's still valid. And we're only talking about 15 days. 15 days on a daily for div is nothing. So let's go over to laser returns. I wouldn't be a bit surprised though if this thing bounces big time. Back up to the 68.3. Maybe, what's that at? 42.5. 42.5 area. Wouldn't shock me at all. Let's go to a daily. Get really slammed off here. Let's make this bigger. There we go, big boy. Well, I was looking at this yesterday. I mean, there is some bull div. Earlier, before we had this this daily candle really took off, this returns oscillator, this white line was headed back up. Now it's turned down. I want to see how this closes, because if we hit one of these significant levels and it's time to go back up to the top side, because I really don't think that Bitcoin's going to dump out big time. There's a lot of doomsdayers out there. It's ridiculous. Cryptocurrency's here to stay. There's just a lot of money to be made right now, shaking weak hands out of their positions. That's why I'm saying, if you don't know what you're doing, sit in your spot positions. Just sit in your spot positions, right? There's no significant, especially on high time frames, there's no significant deviation levels. There's no projection models that have been broken too badly yet. I know there's a lot of people in traditional markets they're spitting out numbers. Oh, well, they're going by data sets. They're going by data sets on a random market. Makes 0 sense. That's why these people literally always get wrecked, and everybody that listens to them always gets wrecked. It's like that. You can't base trades off of data sets of price action. It just literally makes no sense. I've been there years ago, done it. It's not very fun getting wrecked. So we can build some bull div here for sure. Let me take one little peek. But you can see this bear div, right? This bear div on the daily printed up here, pretty significant too. Really steep on the returns oscillator. But yeah, these last 3 days, I mean, this is a no-brainer. If you trade the if you're swing trading the high time frames, it's like the variance take off, negatively correlated. The returns are getting blue histogram. The Z-score is having an outlier. I mean, this is a recipe for a down move that we have been getting, right? Where were we when all this started? Yeah, we were way up there. Come here, little puppy. Where were you, little booger? Yeah, I mean, almost 50K, right? Almost 50K. So it's almost literally in the last 3 days, another $10,000 move. Where in that one day we had that dump. So take a peek here real quick. The bands are starting to expand too. Let me load up. Load something up real quick. This is what I want to get. This, where are you? Score. Oh. Okay. Let's get this Z-score on log returns. Shall we? Oop. There we go, Mr. Log Return. Let's move these up. There we go. Let's turn off the deviation band so I get a better look. Yeah. Yeah, you can see. Right now, and this is one hell of an indicator when you turn it on, log returns to look for div. It's all going to depend. Does this move to the downside? Keep building. I mean, there's bull div setting up. There is bull div setting up. This is why we got this little move back up to the upside after the original dump. All right, boom. And up we go again. Back up to, what did we get back up to? Yeah, 48.8. 48.8 before we, and what did it print? This is how this thing just bangs back and forth, back and forth. Let's see here. Let's just take a quick peek and see if there was a continuation divergence. You know what? Yeah, there it is. There she blows, right there at the top. Boop. Boop. There you go. Hidden bear. All right, so get this big dump. We had a little bit of bull div print. Price action goes back to the upside. Doesn't get above that last data set, but the oscillator does. So you got a higher low on the oscillator, lower high on price action. Bear or hidden bear divergence, telling you that there is a continuation of the trend to the downside. That's exactly what you're seeing. And now what is setting up? Don't misquote me. Setting up bull div. But that can change to drop of the hat. Know that for a fact. Let's see. Yeah, for sure. I was just talking about that Saturday. Here. For sure. Am I on daily still? Yeah, these two candles. Right. Lower low, price action. Higher low on the laser returns. But that's going all the way back to this big 10.5K dump that literally closed outside the 99.7% range, the third standard deviation. So yeah, all these are higher lows. Even this candle, it's a higher low. So there at some point, unless we get one of these big daily dumps again, it's going to take, that's when you talk about shaking people out. But like right now, that's why there's some mad chop going on. People that don't know how to trade it, they're just getting wrecked. That's where, I see shorts just pile on and they're over leveraged. They're getting knocked out of their position right now, probably because they wait until, I don't get it. It's just like you short the bottom, buy the top, or long the top. That's what trading this way helps. Right? You don't do that anymore. You know where these distribution levels are. You know where you're going to get bounces from. Oh, Bilbo, you're full of crap. And I can show you daily candle after daily candle after daily candle after daily candle, where all these TA people are like, oh, that's random. Oh, this is, where's that wick going? Hell, it didn't even hit my 50 MA. What the hell's happening here? Yeah, well, look at all these wicks hitting these distribution levels all over the place, one after another. Some people will never learn. And look at this powerful. Look at this daily candle. We open up. What do? Immediately? We go right up to the 68.3% Laplace distribution range to the top side. Where do we dump out to? Second standard deviation on normal distribution on the daily. To the dollar, to the dollar. I've got it overlaid over here on the VRE. Okay, boom. Here's the opening of the day, right? Boom, we work our way up. This white cross line, 68.3 Laplace distribution range on the daily. We reject from there. Look at that wick. Here is the 1SD or 2SD normal distribution to the downside. Whoop, wicked right back up from there. So it's a distribution game. That's all this is. That's all this is. Why all these people are drawing triangles and all this crap. Oh, it's going here, it's going there. Look at my bat wings. I fly. It's ridiculous. Oh, look at my fib lines. Oh, we're in the golden pocket. It's crazy. It's crazy. And it's not even an argument. You bring anybody here. Bring anybody to this Discord. I'll have a discussion with them. And then I'll show them where they're wrong. What you got to do is show them this chart right here. It's all you got to do is show them the distribution levels. Let me see where you think price action was hitting. Let me see your fib line. Let's see what you got going on. Let's see all your MAs, your Ichimoku cloud. I know Andy loves the way I pronounce Ichimoku. Just had some great sushi last night, so maybe I said it right this time. Let's go back over here and decide time frames. All right. So yeah, I just showed you about this div. And I'm pretty sure yesterday I showed you what was going on with the monthly. I said yesterday, if there's anybody out there, I don't care where they're coming from. I don't care if they're trading beanie babies and they think they know what they're doing. If they don't understand divergence, if they're going to sit there and they're going to talk crap and say divergence is bullshit, turn them off immediately. They don't know what they're doing and they're going to get you wrecked, right? A lot of people, a lot of traders like to lie about a lot of things, right? When you trade volatility, probability, and statistics, there's nothing to lie about. It's all numbers. They always all play out. That's the thing, right? But divergence literally moves the market. Moves the market. Let's see if I can get a good example here. Wow, about 1 minute, just cruising down. Yeah, you're better off up here on the time frames. You could draw divergence all day right there. Just on the 4 hour. Just on just having the Z-score on log returns. Right? Just having the Z-score on log returns. Let's see here. Here is it's not going to let me print that div. Here. Boom. And now it was building from a long time on the returns oscillator. Literally all the way back here. Right? This was all building bear div. I'm just showing you though the Z-score on these two recent moves. There you go. Both of them. Altogether, average about $10,000 down. There's literally two $10,000 moves if you just understand about divergence. Oh, I got rid of my booger. Let's pull that back up. Where are you? Log returns. There we go. Right? So we had that. Boom. Right at the end of it. But that's when you've got divergence building on the returns oscillator, and then the last parts of the move, because you can see on the Z-score, these are all higher highs, right? All higher highs working up to the top. Right here on this last move, not anymore. That's where the Z-score on log returns build up that divergence. Right there, you know. And look, right here, you have an outlier right at the top. Even if you're in on the second candle, you're already having an outlier, right? That's telling you fat tail event is happening. Same over here, right? This div just builds. You can see the first little pullback right here, right? On the 4 hour. That's because, look, high, higher high, high, lower high. Boom, there's the first pullback. Z-score goes back up with this last move. Still a lower high. And it's a higher high on price action. Then we move down. We have a statistical outlier. Even if you're in right here on this candle, boom, 48,250-ish. We just got down to 39.5. Okay. Can't make it any more simple than that for people. Divergence plays a huge part in what I do. I mean, I've always talked about it, but if you understood how important it really is, you would get the hint. Right? You would get the hint. But it's still trending. Yeah, I want to see what this looks like at the close of this 4 hour. I was begging for that 3 SD move. Right? But it gave us a 2 SD move. But at the same time, it was on the weekly, it nailed the 95.4 Laplace distribution. So that's two very powerful areas. So for people that think that, we don't know what we're doing, it's ridiculous, right? Just come on over. I mean, I'll show you some wicks, right? There's the daily, 2 SD, standard deviation. There's the weekly, 95.4% Laplace distribution range. Could that have been the bottom for this week? It could have. It could have. But we could also get a second standard deviation move, right? And that's at 38. See how it pulled back up now? Remember, it was just down under. It was at 37,950 or something. Look at that baby, already pulled back up to 38,126. So that was the confluence that I was seeing between the daily third standard deviation normal distribution and the second standard deviation normal distribution on the weekly. That was an area of interest for me big time. And hell, this day is not over yet. What's going on? How did the traditional markets close? Just barely down at all. And I was noticing VIX, right? VIX was definitely dropping back down. It was rising like crazy. Today it was down 5%. That's why the traditional markets kind of sat there. And I don't know, man. We got one hell of a corrupt government, corrupt Fed right now going on. It's like, in my opinion, they're probably going to freaking not let this market dump, right? They might scare some people and this thing go to the downside a little bit, but it's just like, what an advantage, right? China's market's just getting crushed, all that stuff going on over there. They don't want their markets in the States to dump too. They want to show that financial superiority. Because they definitely don't have the intelligence superiority going on right now with this potato in office. You can quote me on that. We still have these rights as Americans. In China, I'd probably be dead already. Let's see here. Questions. Daily back, the other platform. What are you talking about the other? I mean, any of these distributions can play out. This is why I've got 5 standard deviations, normal distribution, right? That's why. And I can take you back and show you daily candles that hit like the 5th standard deviation, then pulls up inside the second. We're talking like $5,000 pullback and stuff. It's insane. It really is crazy. This is going to be a real interesting day, I'm telling you right now. So that's on a weekly. Let me see something real quick. It's on a weekly. Yeah. See, that was the hidden bull continuation from way back here, literally from this point too. What about this data set? No, it's the same. So from this point on the Z-score and this point from the Z-score. Whoops, wrong. Here, buddy. I grab that little bugger, flip her. There we go. There's the 2 points coming from there. And there. Hidden bull divergence is a continuation divergence. That's exactly what you saw right? Is what we don't, or wait a minute, yep. No. There's some weak bear div, right? From right here, this little up move right here to up here, you can see a higher high in price action, and the oscillators are pretty much at the same, this little point in the z-score right to here. Is it building on? Actually, there is none. There is none. The this is where the, yeah, I got to work on this algo needs worked on. This should not be printing divergences in the middle of a data set like this. We got to get this fixed. But hey, it's playing out. It's playing out. Maybe the algo is smarter than me. No, this is right. Listen to me. Okay, man. Okay. And we also, if you get over here, what am I on the weekly? Look, I mean, here's the bottom power mean right here. Bottom power mean's at 41.80 right now until the close of this week. That's not going to move until the weekly close, and they're both heading up still. So that's also, you know, boom, we pulled back. We're right back above that. Went down 39.5, pulled right back up. And you can see the last time that this power mean on the weekly got tested was on this big dump, right? From 65K. Down, tested it, and then we got this rocket ship back up to like 53. Came back down, tested the power mean again. Powerful. Dun, 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 dun. Yeah, I mean, I showed this before on the monthly. We did this yesterday when I needed to do it. Let's drop down some low time frames. And we did. This baby's just running. Actually, nope. A little weak bear that did play out. And that last move to the downside, but now back up. Divergence, really. Actually, I mean, yeah, there is. Way back to this data set, which is only a 15-minute chart. It's still valid. So yeah, there was some bear div from this point to here. Boom. Higher low on the z-score and log returns. Lower low on price action by quite a bit, actually. A few $100. What is that? 47. Yeah, 500 exactly. Yeah, you can always find div. You can always find the divergence. Right, like right here. When you get here, got a higher high in price from back here, right? That top. Lower high on the z-score right here. Boom. Then it starts coming down. Then it has an outlier right here. Big 15-minute candle. And then what happens? Hidden bull div, right? So this move, boom, then we get some hidden bull, continuation back up to the upside from this point. Lower low, price, or on the oscillator, higher low on the price action. Been on a little divergence kick lately. I just want to drill it, especially when we, the Discord's closed right now. It's just us same people hanging out. Might as well be giving you guys the goodies. That way, when we get new people coming into this Discord, I mean, this was the time to be studying and doing things, because trust me, if you prove yourself that you are a very productive member of the Discord, and remember, you're not going to have to pay to belong to this Discord. You're already in here, right? So, new people, it's going to cost $10 a month to become a part of this exclusive community. And that's exactly what it is. The days of just letting people just sit around not doing anything are over, right? We want people to interact. We want people to learn. That's the whole point of it. To create a massive community, at least as big as we can get it, of volatility traders, right? Let's see. Let's go. Let's go to one of my favorite time frames. The 90 minutes. Yep, there's the hidden bear right here. 9 from all kinds of points. All kinds of points. This was the last one right here. So from here all the way to right? You got higher highs on the oscillator, lower highs on price action. Boom, continuation to the downside. And it was playing out. This is all of these points on the Z-score. It's all continuation divergence, and you can see it just moving down every time. Continuation, 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 more continuation. But what's it doing now? So I love the 90-minute. Look how long it's been building bull div. The whole time, pretty much. That's why. I mean, it's divergence back and forth, back and forth, back and forth. Divergence moves the market. There's always an imbalance in buy and sell pressure. That's what moves the market. 100%. Yeah, we had some perfect little rejections too. Perfect rejections off this log MAs. Bam. So with using divergence, which nobody has this yet, we'll get this thing fixed up real nice and pretty, packaged up like a champion, and we'll be distributing it. I'm sure we get our new package put together. Like I was going to say before, there's people in this community that code up awesome indicators that are not for sale, right? But when these certain individuals see people excelling in the Discord, don't be surprised if all of a sudden one day you check your invite-only scripts and you're like, holy shit, who gave me this gift, right? People are going to start doing that. Kind of came to a conclusion. And people are willing to share their hard work with other people that are making an impact in the Discord. So yes, another exclusive aspect of joining this community, right? Because there's a lot of people in here creating things. It's beautiful. Yeah, soon. We're working on it. We're literally almost done with we're just waiting on these other two combo indicators. Probably could be within a couple days. I know close. It's trust me, it's not the people building them. It's the limitations of pine, right? Limitations of pine. Maybe one day we'll fix that problem, right? Won't have to use pine anymore. Wink, wink. We're working on all kinds of stuff. Let's see. Beautiful. So the 90 and the 45 minute. Favorites. Yeah, I didn't even have to look. Yeah, bull div there too. And it printed right pretty much at the bottom here. It's going to be, I wouldn't be a bit surprised to close back up inside by the end of the day, the 68.3 daily range. And that'd be one hell of a shakeout for all these people. Close up above like 42.5, where it's at. Yeah. Close up above 42.5. But I'm still thinking, I'm definitely going to be watching. I mean, look at these rejections on the 45 and the 90 minute. And I drop back down to the 15. Here we go again. There we go again. I mean, we're right here. What's this up here? 42.1. What's the top one at? 42.5. Boom. There, right here. This top power mean on the 15 minute. That's right at the bottom side of the daily 68.3 Laplace distribution range. So here's the 15 minute. Let me blow this up. Show you what's been going on the last few days. I mean, look how this trend machine works. Look how you just continue rejection, 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 big dump, rejection, rejection, big dump, rejection, rejection, big dump off of rejection. We recently got back up above it. Now we're right back down below it. Everything's flipping again. So if we get up here to this 42.5 area, where's this new daily range going? Let's see. And this is what's great. When you get towards the end of the day, you'll know, start reading price action, that towards the end of the day, you know, price action likes to move right to where the new daily volatility range is going to be, and we're just like almost right on top of it, right? This price, where the price action is right now, maybe a little higher. 40. Let's see. It's going to be like in between 41.3 and 41.7 probably. Like having that big of a movement in between my numbers, but there's been a lot of volatility today. But yeah, I'm thinking right in that range, right around where we're at right now. It's going to be like the new daily volatility range. So there's a battle going on right now. The bulls want to close above that area. The bears want to close it below that area. The ball's in the bear's court right now, though. I mean, we are below the weekly range, the monthly range. The bulls are going to have to come out hard, because now we did have daily ranges up above the weekly and the monthly. Now they're starting to print below. Today is going to be below both. And we have a really bad week this week. You're going to get the freaking weekly range closing back below, or opening up a new one below the monthly range. And that's how fast. I've noticed that. The last 3 or 4 times, everything's lined up one way. Boom, it just gets shattered and flips the other way. Same with it going to the upside or the downside. It's worked both ways. It's like, so these are these more sophisticated algorithms tricking these lower sophisticated ones, in my opinion. That's what's going on. Let's go out here. Oh, look at all that. Boy, look at all that noise. It's delicious. Delicious noise. Breaks in correlation, expansion and contraction of volatility. Yeah, I mean, you can see on these last, 3 15-minute candles, I mean, on the high length, you get a break in correlation back to the upside, and we are expanding. It was down about 90, back up to about 95. Broke correlation right here, broke correlation right here, all positive. So you're seeing that bounce out of there. Down. A little low battery on my time. Is it 2:56? Oh my God. I really just talk an hour and 10 minutes. I think so. That's what he does good. He yaks. Yeah, you should see the look on the tourist's face when they get on the same chairlift with me. Oh, shit. They're like, who is this guy? Does he ever shut up? Nothing gets me more jacked than a 2-foot powder day, man. I think volatility gets me jacked. You should see me on the mountain. All right. That's right before we go. What do we do here? What's volatility doing? I'm telling you, we got a lot of bull wicks down here. We do got a lot of bull wicks. Like I said, we are building. We're building some nice bull div. You can see, boom, there was a nice, that spot right there, right? Lower lows on price action, higher low turns oscillator. We get this big bull wick, a nice 4-hour candle back up, another dump. If this price continues to the upside through this daily close and into the new day, you're going to see this return oscillator. It's just going to turn up, and it's going to be bouncing right off the zero. That bull div, hell, this thing can skyrocket. And here's another thing. When this thing comes out of the hole, finds a bottom, it's going to be screaming. It's going to come hard. So that's what Bitcoin does. It doesn't give anybody a chance to get in positions. That's what it's fantastically famous for, right? Knocking people out of their damn over-leveraged positions, leaving them crying, pillow over their head, going, but I was long. I was long, and it dumped, and it hit my stop loss, or it liquidated my account, and now it's up. Like, yep, that's because you're a knucklehead. That's all I can say about that. All right. So if you're watching this for the first time on YouTube, at this point, you know I'm a madman. You've got that straight. I trade volatility, probability, and statistics. So does everybody else at Alpha Trading. We do that because all of these markets are in a state of geometric Brownian motion. Randomness. That's why we use indicators like this. That's why we have an entropy indicator to let you know when the market is coming out of randomness into trend. If you'll definitely want to subscribe to our channel so you know when our videos come out. We've got a lot of educational videos that are going to be coming out, and Monday through Friday, 2 p.m. Pacific Standard Time. We put out about an hour-long video discussing the market. And I mean, if you have a request, if you're in the Discord, make a request in the chat channel, right? If you're on YouTube, make a request. Make a request in the YouTube comments. I can cover whatever you want. It's not like this is specific to cryptocurrency. Volatility, probability, and statistics has been used to trade markets for decades. Not just crypto, everything. We trade crypto because it's where the volatility's at, right? This is where all the volatility's at most of the time. And that's why people that don't think these high-frequency trading firms are in cryptocurrency, you're badly mistaken. They don't give a shit where the volatility's at. Natural gas, oil, freaking gold and silver, SPY, Tesla, they're trading it. Wherever the volatility's at, they're trading it. Crypto is non-stop volatility. Just non-stop. Nothing moves like crypto. So, of course, they're going to program their algos with this info, and they're going to make buckets of money. That's what they're all about. They're sitting around smiling because all the retail traders are drawing lines and triangles and listening to YouTube gurus that don't know what they're talking about. So yeah, the link to our Discord is in the description of our videos. The Discord's actually closed right now. You can just hang out in the, there's a waiting room. You can hang out. When we reopen, we'll let you know. There is a verification process that you have to go through just to keep out the riffraff, because there's plenty of that out there. And I want to thank everybody that's watching live in the Discord. That's another bonus about joining this exclusive community. You can watch this live. You don't have to wait for the recording to come out on YouTube. You can watch it live 5 days a week. Sometimes I do some stuff on the weekend. But yeah, guys, thanks for joining me today. And wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. I'll talk to you guys tomorrow, 2 p.m. Pacific Standard Time. See you guys.